So welcome back to Reimagine. Here we are for the January conference, kicking off 2021 in style. And as per usual, I'm bringing you guys some of the best, smartest, cleverest, most on-the-ball people in the space.
But unfortunately for you, I'm not one of them.
Not true at all. So joining me today with his own pre-intro, which I love, is old friend of mine, old friend of the show, old friend of everything, Josh Frank from the Tie, a man with his finger on the pulse of crypto data like you wouldn't believe. This guy has insights on insights. He's got the behind the machine on the behind the machine. Josh, firstly, without further ado, thanks so much for being here with us again. Pleasure to speak to you as always.
Thanks for having me on.
All right, so Josh, I introed you there with the big balls. I said you were the man with the insights behind the insights. Here we are, kicking off 2021. Give me your biggest insight so far, maybe this year, of the past month, since the last time we've had the pleasure of speaking to you here on Reimagine.
Wow, that's a lot of pressure. That's a lot of pressure.
I like to hit you with the hard balls.
Yeah, I mean, my biggest insight, one of the more interesting pieces of research that we have coming out is that we're not entirely sure that technical developments actually matter in the space. Everybody talks about, and we obviously, because we're a sentiment data company, talk about the fact that crypto is very sentiment driven. It's very driven by the wisdom of the crowd, investor emotion towards specific assets. And we've started to do a lot of research, and we're releasing this soon, on the fact that GitHub activity, for example, and technical development don't seem to be correlated whatsoever with price movement. Now, obviously, you don't want your asset to be hacked, right? You don't want to have major problems. But if we look at Ethereum, Ethereum is still, it hasn't got at par with Bitcoin, a few months ago, but it's now moving pretty much in lockstep with Bitcoin again. And, ETH had gas fees of $500 the other day, right? And Bitcoin doesn't have the best technology, right? It's not the best blockchain. It's not the fastest. It can't be used as digital cash, which I know we've moved to the store of value narrative. But if you look at the original Bitcoin white paper, it said, a peer-to-peer electronic cash system. It didn't say a peer-to-peer, digital gold. So, it's just, backing up kind of the notion that, crypto is really just sentiment driven. And obviously there's some, you need to have some base level of technology, but beyond that, it really, comes down to sentiment. And kind of just one more point to add there, with Ethereum, the reason that Ethereum has seen so much traction is because of the community around Ethereum, right? Because you have ETH Denver and all these large Ethereum conferences, you have hundreds and hundreds of developers building on top of Ethereum, maybe Polkadot or even EOS or any other, I'm just throwing out random names of platforms or better platforms, but it's the community that's built around Ethereum. So what we actually did is we built a ton of trading strategies, basically trading on when there's more, commits on a GitHub, looking at specific types of commits or development activity, and basically found that it was totally random. Like it didn't improve your returns whatsoever if some project was more active versus another one.
So I mean, there's a fascinating side to what you just said, and one that, and I want to make clear to our audience here, I'm playing devil's advocate on this. This is not me espousing a personal belief here, but does it sort of imply then, if it's not really about the underlying technology, if it's just kind of about this sentiment and excitement and hype and internal market play and speculation that's going on, does that lend a little bit of credence to the idea that maybe, crypto markets are a bit of a hype bubble, a bit of a even, and again, playing devil's advocate here, but a bit of a Ponzi scheme in that, the last one holding the bag is going to be the one that gets suckered in? I mean, does that not somehow lend that credibility, or am I overstretching the conclusions?
I mean, I think everything's a hype bubble at this point, but I think crypto certainly is a hype bubble, and I think altcoins are certainly hype bubbles. I think to say that is not a stretch whatsoever. I think with Bitcoin and Ethereum and some other assets, there's more to it. But as it relates to, once you go from 10 to 10,000 on the list of tokens on CoinGecko or CoinMarketCap or wherever else, that's when you start talking about things where the tech doesn't really matter. They're more hype bubbles, but I think the stock market is too. I mean, a lot of people talk about inflation, but where does inflation actually reflect itself? It's reflecting itself right now in the prices of assets, right? The prices of assets are going up way more relative to the US dollar. I mean, by assets, I mean stocks, and crypto and other, and other assets. Are going up as a result of inflation, right? We have trillions of dollars coming into the economy. It's inevitably going to just pump shit up for no good reason. And it, kind of stocks have become hype machines too. I mean, I don't know if you remember this summer, but Hertz went bankrupt, and then the stock went up by 400%, like just absolute stupidity.
And that's what worries me. I don't know. I mean, I'm looking at that. I'm looking at things like the Hertz example, which is a great one. And I sort of think, wait on, aren't crypto markets sort of matching that? Isn't that kind of what we're just seeing here in some ways? And should this, massive bubble pop, which I'm not saying there's any sign there will be. I mean, we just heard from the Biden administration that they're trying to pump another $2 trillion into the US economy. Maybe this bubble's got a long way to run. But at some point, should it pop, as all bubbles inevitably do, does crypto not get taken down with the rest of the market, or is it got something else?
The one thing to consider, though, is will it ever pop just because we keep pouring more money in? Like the value of a stock in real terms may be the same or less because of the amount of money that's being flowed into the economy, right? So just something to consider is there's just so much money being poured in, we're talking about trillions of dollars, which is just, we're talking about this new Biden stimulus package is double the value of all crypto in existence, just for perspective on how ridiculously big this is. And this is like our fourth or fifth stimulus package that we've had since COVID started, right? So there's just so much money pouring into the economy. I mean, certainly you need to have a correction at some point, one would think, but we haven't had a correction. We had a correction I'm talking about the stock market in March for a little bit of time, but we hadn't really had one since 2009. We had a couple small pullbacks, but then, we just with infinite quantitative easing, it just seems like things are only, which doesn't make any sense mentally, like when you think about it, but things just seem to only be going up. But kind of back to crypto and Bitcoin and what this means for the industry. We've done a lot of research on this as well. And I'm happy to pull up some charts if you guys want, but I could just explain it briefly. What we found is that 95% of the year, the only cryptocurrency you want to be in is Bitcoin. But there's 4 or 5 2-week periods during the year where alts really have their run. And basically the way that I like to think about the market, and I know a lot of other folks in the market, from the institutional side think of it this way, is basically when Bitcoin has a really big run up, right? It runs up to X amount of dollars. It's up 100% over this period of time, but then it starts to stagnate or flatline. That's when a lot of retail comes in. They see the price. They're like, holy shit, Bitcoin just went 2x, but I missed out. It's not going to go 2x again. And so which currency is next? They don't know. Your average retail person has no idea what they're interested in. Litecoin and XRP and Bitcoin and Ethereum Classic and Dogecoin. Like I had somebody call me the other day and say, when do you think Dogecoin is going to go to $1? They have no idea that Dogecoin is a meme. And but this is retail, right? And so what happens is when you kind of get the stagnation in the market, you have a ton of retail that pour in and they pour themselves into these altcoins, just thinking that every crypto is made equal and has the same value. And what happens is you see these 2-week periods. For example, last summer, we saw this run up of Tron of about 90% in 2 weeks, just driven by, it was the DeFi hype. And then, Tron launched Sun Genesis mining and all this other nonsense that maybe nobody actually cared about the technology. But when you're actually able to make these announcements during these kind of altcoin, very short bubbles that occur at like 2-week intervals, like the DeFi bubble we had for maybe that was 4 weeks. But you basically
that had longevity. That stayed.
That was like 4 weeks. But here I could pull some data up for you. Hold up. So basically, we looked into how long these things last and how you predict them. And what we found right here, what we're looking at is the red line is if you stayed all in altcoins this year. The black line is if you stayed in Bitcoin all year. And what we actually saw is that if you just held until about December 18th or so, altcoins would have outperformed. But then we see at the end of this year this massive run up in Bitcoin, right? And we don't have the full year here. We don't have the end of December, but it goes even further up, right? And so there's clearly certain times where the assets move in lockstep, certain times where you get this massive altcoin outperformance, like here, and certain times where Bitcoin just moons. And so the question was, how do you figure that out, or how do you predict it? And so the first thing we looked at was this metric called relative trading volume. And basically what it looks at is the relative number of tweets on Bitcoin versus altcoins. So basically the idea is So the idea is basically when, trading on altcoin starts to grow way faster than trading on Bitcoin, you swap to alts. And we see that here, right? Where this is all, we drop down here, alt trading volume starts to, outperform Bitcoin, we swap into alts. And then here we see the same thing on Bitcoin, we swap into Bitcoin. right? So that's kind of at the basic level, right? Okay, if trading volume on alts starts to pick up, move into alts because that's kind of a sign that alt season picks up. But similarly, as I mentioned before, crypto is very, very sentiment driven, right? And so the next thing that we took a look at is, okay, what about tweet volume? And what we see here is a kind of a similar pattern, right? When altcoin tweet volume starts to moon relative to Bitcoin, that's when you want to swap into alts. And we picked up alts right here, basically right at the juncture where, altcoin prices skyrocketed versus Bitcoin. And then here we were able to identify, hey, Bitcoin tweets are starting to pick up again, relative to altcoins, and look at that massive Bitcoin rise we were able to get. And then so we started to dive in a little bit deeper. And one of the things that we know moves the market a lot during alt seasons are exchange listings, right? When a new asset gets listed on Coinbase, for example, the average price movement is anywhere from 40 to 60% on an exchange listing. And so we looked at, okay, is there any sort of correlation between exchange listings and alt season? And in fact, we find that there is, right? When we see these big spikes in exchange listings, for example, here, that tends to occur around alt season. And diving even further, here we looked at news and news from crypto from cryptos themselves, right? So when the tokens themselves are putting out news stories, on their own tokens, and we see that kind of correlates, right? So kind of throwing everything together, right? We found basically if you just trade off of when there's a ton of news on altcoins, when altcoins start to release a ton of stuff, there are about 4 periods of time where you should be in alts a year for about 2 weeks. And we can see the green line is if you basically just were in alts for these very short periods of time. The black line is in Bitcoin. The red line is in equally in the top 100 alts. And you can actually double the performance of Bitcoin just by swapping into alts for a few periods. And so we looked at, okay, is this just, do we just get lucky? Is this random? But we actually did 1,000 random tests of basically randomly swapping between Bitcoin and alts. Our strategy outperformed 5 out of 1,000 times, which makes us believe that, this strategy is actually is functional and actually works, right? So just kind of for perspective, right? All these things that I talked about were all hype, right? Trading volume going up, that has nothing to do with technicals. It has to do with hype. Tweet volume going up, it's got nothing to do with technicals. It has to do with hype. Listings got nothing to do with technicals. Like, news events from projects have nothing to do with technical developments for the most part, right? It's all kind of hype. So with alts, they kind of have these mini bubbles throughout the year. But that said, look, alts may have no long-term value, right? But it doesn't matter. If you're just trying to trade and make money, they're fantastic. I mean, hedge fund the space love shit coins because they can go in and they can trade these little windows. And, there are a bunch of, hedge funds that trade, let's say 50 crypto assets. These are smaller funds, 50, 100, $20 million or whatever. But they outperformed Bitcoin this year because they're able to catch the DeFi wave this summer or anything else. So I think to the point that you made, certainly we have these hype bubbles, but they're very short-lived.
So, I mean, that gets me wondering, though, how often and how repeatedly can we consistently expect these trends to continue into the future? I mean, do you see any sense that there's a waning element to these trends? Are people starting to catch wise? Or more importantly, as the retail market seems to be, and you know this better than I, but seems to be less representative of the overall market, as you get your bigger institutions coming in and representing much more of the overall liquidity?
The thing is, it doesn't matter. It matters for Bitcoin, right?
Okay.
Because institutions are not buying alts. Like, do not think an institution is going to come in and buy your Cardano bags. It's not happening. I'm telling you now, it's not happening. Institutions are here for Bitcoin. Potentially, they're looking at Ethereum. Some of them are actually interested in DeFi, interestingly enough, but 99% of the time, they're just coming here for Bitcoin. That said, so where does retail go, right? If institutions are in, they're pouring capital and the prices of Bitcoin are going up so much, what happens? Well, retail is FOMOing, right? And they're like, oh, what do we do? And then retail is moving into alts. So they may actually be taking more money than they would have put in, they may be taking some of the money they would have put into Bitcoin and all the money they would have put into alts and taking some of that money that they would have put into Bitcoin into alts. And the thing is, alts are totally illiquid. Like, some of these things, have 20 million in daily trading volume, 5 million in daily trading volume. And so I'm not suggesting that any of these altcoins have any long-term value whatsoever. I'm just suggesting that there will be periods of time, I think, continued in the future where you see, you know, bubbling up of alts and ridiculous runs of things like Dogecoin went up 300%, you know, a couple of days ago because of a TikTok, or, you know, a couple of weeks ago, whatever. And I think we'll continue to see that because I think that, you know, look, Bitcoin is already at $40,000 or $37,000, right? I think to think that it's going to 10x, realistically, you're making a bet that you think Bitcoin's going to be worth $7.5 trillion. And you know, I think most people don't think that's happening anytime soon that are reasonable. And so people look at alts, right? If you want your Lambo moon, right? You know, we got 10x Bitcoin growth in 2017, right? You know, there were 100x growth in the past. You know, I think a lot of people will look at the market and be like, maybe there's not a path to 10x Bitcoin growth. How do I get my next Tesla? How do I get the next Bitcoin? And I think people will FOMO into alts for no good reason. And I think we'll start to see runs that are very temporary in nature. But if you're a trader and you're good at what you're doing, you'll be able to make money off of those.
Right. And it sort of seems to me, it sort of smacks of, you know, that gold rush effect. You know, someone hears there's gold in them hills over there and they go running and they're trying to grab hold of it. But ultimately, yeah, I mean, I got to question the sustainability of a market like that. And I think about something like, all right, so you mentioned Doge, and I spoke just recently actually to Jordan Lyle, who was the creator of the meme project and the meme token that took off back in August. And he literally said, you know, he created that off a tweet that happened 3 a.m. He tweets about this joke idea for a DeFi project called Meme. Within a few hours, it's up and running. And within a month, it had, you know, a circulating, you know, market cap of $48 million. And it's obviously popped since then, and you know, it's gone down somewhat. Still has a market cap somewhere in like the 10 or 15 million. I don't remember exactly. But like, I look at something like that and I think, does that just show we're in such an immature market that this is nonsense? Or is this just happening everywhere, as you said with the Hertz example, and crypto is just another field in which people are throwing money around in crazy ways trying to make a quick buck?
I mean, you can look at, you know, Tesla and just how absurd that is. I mean, people are valuing Tesla as an energy company now and, you know, looking at it as the future. But we know that all the retail dollars coming into the space aren't thinking about, you know, what Tesla's PE ratio is and what their earnings are and, you know, how good an earnings call went or how good their production is, or can they keep up with demand, or when are things being, like, retail doesn't care about that, right? Retail is just FOMOing into Tesla. They love Tesla. They think it's cool, right? So look, I think that, you know, assets bubble up everywhere, right? We saw that with the .com boom. We see that today. You know, we see that with, you know, with tons of different things. I mean, if you look at, for example, the baseball card market, you know, there was a Mickey Mantle rookie card today or yesterday sold for $5.1 million, which is absurd because obviously that was, you know, the highest mint condition one. But I remember a few years ago, those cards were going for $10,000 to $20,000. And so, you know, I think there's just, you know, to say it's just, you know, crypto, I think is probably not right. But I do think there's a sense of memes and meme community in this industry. And I like, you know, there are memes that are going to do super well. I mean, like the tokens that did well this summer are like kimchi and sushi and hot dog and this and all sorts of stupidity.
You're not a food coin, man? You're not into the food coins?
I think it's stupidity. I think all this is complete stupidity, but I think you can make a tremendous amount of money off of it. I think people will, and I think people will lose their shirt. So it's just a matter of how well you can trade. And you know, people will make money, but I think inevitably a lot of this stuff is going to go down to zero, and I think everybody knows that.
So when you say go down to zero, I mean, I kind of wonder what that looks like. You know, we've been talking about consolidation in the market. You know, you and I have been having this. Yeah,
I'll show you what it looks like.
All right, yeah, oh, great. That's exactly what I wanted to hear. All right? This is the man with the answers and the insights. I make a speculative question. It's like, oh, let me show you the data. Let me show you what I got.
Here you go. This is what going to zero looks like. This is
Dentacoin.
Dentacoin was trading at one time was trading at I can't get there, a $2 billion market cap. It went up 100x in 2 weeks in 2017. It's now trading at a $4 million market cap. It is the cryptocurrency for the dental industry. You can look it up. I don't know why the blockchain solution is needed for the dental industry. It's for users,
obvious use case. Why didn't we think about this?
It's for users, dentists, and traders. This thing went up to $2 billion in 2017. Wow. So if you want to see what going to zero looks like, that's what going to zero looks like. And a lot of the shitcoin bags that you guys are holding, the chart eventually is going to look like that. So, you know, I say trade it all you want, but to think that there's some sort of longevity to a lot of this stuff, I think is just completely ridiculous. And something else to add really quickly.
Go.
With a lot of these projects, the founders and developers and people involved have been holding these tokens since the ICO back in 2016, 2017, 2018, right? And what happened is at some point they were worth a shit ton of money, right? Because these tokens in 2017 were worth way more than they're worth today, right? Bitcoin is skyrocketing, but Bitcoin's totally different. We need to separate out Bitcoin from everything else. Maybe we can bucket in Ethereum, Polkadot, a couple other things with that. But for the most part, it's Bitcoin and everything else, right? What happened is a lot of founders in 2017, 2018 were worth so much money. I mean, some of them were worth billions, if not hundreds of millions of dollars. What happened is their token is now down 90% from that. So if they didn't cash out, they were worth $50 million. Now they're worth $5 million, right? And so I'm concerned that the second any of this stuff doubles or triples, the founders are just going to cash out. And they don't care about the longevity of these projects. I mean, the founder of EOS, the CTO of EOS just left, right? After not building anything, the fact that, there was a great tweet that came out the other day from Jeff Dorman from Orca on the fact that EOS has 2 times more Bitcoin than the market cap of their token. I mean, there is so much ridiculousness in this space. I'm worried that, once some of this stuff pops back, founders are going to be out because they know that there's no long-term sustainability for these tokens.
All right. So we can accept that, once you get past, your top 100, your top whatever, these projects are probably all going to inevitably die off. The trading volumes will shrink. As you say,
some of them may have a big run. Some of them may come back. Maybe there's a diamond in the rough there. But I think broadly speaking, to think that you're going to buy coin 627 and you're going to become a billionaire is a little ridiculous.
Right. So then I want to go through with you. I want to get a little comprehensive on this. All right, we've spoken about Bitcoin. I'm going to go through the top 10 a little bit and just get your thoughts. So we got Bitcoin. All right, that's in its category of its own. Don't think we need to go further on that. Ethereum, similarly, you've already sort of said it's developing its own thing. It's got some institutionalized.
Well, fine. I think the thing that's interesting about Ethereum, let me just throw out 2 ideas here. Why did Ethereum run in 2017, 2018? The ICO boom, right? People needed Ethereum to invest in ICOs, right? What's happening now, I think, could be quite similar. If there is a DeFi run, people will need ETH to participate in a lot of these projects. People need ETH to pay gas fees on Uniswap. I think there is an argument to be made that Ethereum will run for the reason that people just need ETH to participate in networks. So that's my thought on Ethereum. I hold 2 cryptos. 90% of my holdings are Bitcoin, about 10% are Ethereum. I recently acquired the Ethereum only for the reason, that I explained earlier on the Bitcoin versus alts. I'm not a trader. I don't know how to trade. I don't know when to swap into alts. I don't know which alts are going to run, but I do know that if alts and DeFi have a run, people are probably going to need ETH. And I do have a theory that ETH could outperform Bitcoin, but I'm only holding that ETH to swap it into Bitcoin. I think once we get 2 weeks of a big run, then I'm going back all the way into Bitcoin. So that's just my perspective overall.
No, good to hear. Okay, so then moving ahead, we'll skip over Tether, because that's its own beast. But heading up to XRP, is that, as far as you're concerned, dead in the water? Or are we seeing Dentacoin play out in XRP? Or
I think the fact that I don't know what the price is today, but the fact that retail is still
28 cents.
28 cents, the fact that it's still being propped up is complete garbage and nonsense. The SEC doesn't put a lawsuit out against something saying it's security if they don't think it's a security. The SEC thinks it's a security. It's been delisted on every major exchange. Every OTC desk has stopped trading it. And nobody freaking uses XRP. People that are using all of the products built by Ripple aren't using XRP. To think that a bank wants to hold a volatile asset that, by the way, the SEC thinks is a security and is going to conduct settlement using a highly volatile security, you're out of your mind. They're going to use stablecoins. And not only that, we've also seen, the OCC, put out ruling basically saying that banks can use stablecoins now for settlement. So there's zero use case for XRP. It's a security. Stop holding your bags. Stop thinking it's going to moon. You've been deceived by Ripple. Look, it's possible that it can go back up, right? It can go down, it can move around, but that's because of nonsense and hype in the market that has nothing to do with the fact that it's actually useful or not useful. And if you look at the market cap, it's trading at a $10 billion market cap. That's absurd. Like, it makes no sense. And the only people who have made money off of XRP are the founders of Ripple. No one else did. You guys have been sitting on XRP bags for the last 2 years. Just stop. You've been deceived. File a lawsuit against Ripple, as many are. But no, I think XRP is a joke. I mean, it's ridiculous.
All right, and don't pull your punches now, Josh. I mean, you know, I wouldn't want to hear a half view.
I have no problem throwing punches at
Good.
Ripple. I think it's ridiculous.
All right. So then let's move to the other one, which, depending on how we calculate at the moment, because the market cap is now effectively equal with that of XRP, but Polkadot. What do you feel is the sentiment and the industry views there?
I really don't know much about Polkadot.
It's been having a good run. I mean, the last week it's up over 40%. It's not doing too bad.
I mean, look, I know people think that Polkadot is like ETH 2.0 and certain things. I haven't spent that much time on Polkadot. It hasn't been in the top 10 for very long. So I would have a misguided, analysis of Polkadot, other than to say, look, it will do well if it can steal some of the applications built on top of Ethereum, right? If it can steal some of DeFi, if it can steal, the reason Ethereum works and Ethereum is so big, as I mentioned before, has nothing to do with the technology. It has to do with the community.
Right.
And so if Polkadot wants to succeed, it needs to build that. And I don't know anybody building on top of Polkadot. I know people that have been excited about Polkadot, but is my money in it? Not at this point.
Okay. Well, we can see how that one plays out. Flipping over Cardano. Any exciting action you're seeing there?
I know that Cardano has a very big crew of retail supporters. I know Charles does his weekly AMAs that generate a ton of buzz. Whether the technology is any good, I have no clue. Whether that matters, I have no clue. I think Cardano is one of the assets, though, that retail does care about for whatever reason. I don't know why, but no strong opinions. I mean, look, we can go down this list, and I'm just gonna say I have no strong opinion.
No. I'm gonna stop soon. I got two more that I want to get your opinion on, strong or otherwise. And having not a strong opinion is also a valuable piece of information. In terms of how we think about this.
Like, do I think institutions are gonna buy Cardano? The answer is no. So if you think a hedge fund's gonna come in and buy your bags, the answer is no.
All right. Last two before I'll pull you off this list, but Litecoin. I only asked that one specifically because people, I don't know, there's been some buzz lately. People are saying, oh, if you missed the Bitcoin run, well, Litecoin's so similar, you can get a run into it.
That's what I'm suggesting. There's going to be these giant runs of coins for these stupid reasons. Charlie Lee sold all of his Litecoin back in 2017. Like institutions aren't going to buy your Litecoin bags. Like, they're not. It's not happening. So, like, I mean, look, Litecoin is kind of like a better version of Bitcoin. It's introducing, some privacy features and different things like that, but no one cares. Literally, no one cares. You're just buying it off of some narrative, but you're not, to think that there's long-term sustainability there, I think is totally misguided. Nobody's actually using the Litecoin blockchain.
All right. And then that segues nicely into the last one I'll ask you about. And I guess I'll ask you this in pair, but your Bitcoin Cash and then in turn your Bitcoin SV. I mean, is that done? Can we put that all to bed now? Have they fallen far enough, or is there still hope yet that Bitcoin Cash might come back up?
My perspective is there long-term hope for any of this stuff? Probably not. Do I think this stuff's going to be around in 15 years? No. But look, the thing about Bitcoin Cash and Bitcoin SV is you have founders of both that have boatloads of cash, and they can make it last. Right? Bitcoin SV is being mined by Craig. It's being supported by Craig. There are multiple Bitcoin SV hedge funds that are funded by Craig. And so nobody else is buying Bitcoin SV other than Bitcoin SV. I mean, the same thing goes with Tron as an example, right? Tron is just, it's Justin and his friends propping it up and trying to dump on retail. So, I don't know. I mean, look, I think Roger Ver Roger Ver was great to Bitcoin. Roger Ver was one of the first advocates for Bitcoin. Roger Ver is the founder of Bitcoin Cash, for anyone who doesn't know. He was great. He was one of the first people that tried to get Bitcoin mainstream. And I think, in the white paper, it says, as I mentioned before, peer-to-peer electronic cash system. He really cares about that, right? And with Bitcoin Cash, the whole idea was creating a Bitcoin that can be used as a cash. But I don't know. Personally, I look at stable coins as solving for that problem. I think we're going to see stable coins take off. I mean, whether it's Avanti Bank or whether it's Goldman Sachs moving into stable coins or any of these other companies, either within the crypto space or in the traditional space or central bank digital currencies. I think digital currencies are certainly going to be used for payments. I do not think it's going to be a highly volatile asset. I just don't. I think it's going to be, something pegged to the US dollar or a weighted basket of advanced economy collateralized assets.
Right. Okay, so, well, there you go. You've given us your overview of the market as it stands for now, your optimism and your pessimism. So I want to change tacks a little bit, drill in a little bit on what you guys are doing over there at the time. Now, you've shown us some of your research, you've shown us some of what you're doing, but fundamentally, you guys are about sentiment data and development. What are some of the latest sort of initiatives you guys are taking? Some of the latest areas you're choosing to focus in on? Give us a little bit of a taste of that.
Yeah, I could give you a bit of a background. So we certainly started as a sentiment data company on the premise that, sentiment data is useful in traditional assets where you have fundamentals, right? You look at Microsoft, we talk about the fact that the stock market is a bubble, but certainly Microsoft has earnings and revenue and dividends, and there's some tie of their valuation to their, to their fundamentals. And sentiment data in traditional markets can be useful. So in crypto, where there are really no fundamentals, sentiment data is the largest thing. But the thing that we realized a few years into the market is that the one problem that anybody had in this space is, like, I was going around to hedge funds, other institutional investors, and other market participants, and I was asking them, okay, you guys are trading 40 different cryptos. How are you actually monitoring those assets? And people were like, well, we subscribe to 27 newsletters. We have an analyst who spends 40 hours a week on Twitter. I'm sure you guys spend 40 hours a week on Twitter, right? We go to these 7 websites, and I was like, that just doesn't make any sense. Like, the amount of effort it took for people to monitor the market and then be behind and fall behind the market, was unbelievable. And, so I was used to, in the equity market, logging into Bloomberg or FactSet or any other platform, and you could see a company's earnings calls. You could see a company's, a news on a company, their earnings, their revenue, their dividends. We realized that, people needed technology to monitor this market in real time. So we basically spent 2 years identifying where every piece of information in crypto breaks or originates, and built technology to go out and scrape or pull in that information in real time. So we actually pull in real time news from 3,500 different global regulators. So whether it's the Nepalese Central Bank, whether it's the Wyoming, whether it's the New York Department of Financial Services, whether it's the Singaporean, monetary authority, you name it, we're basically pulling in all that information in real time, looking for, regulation around crypto. We parse through every SEC filing in real time. So we're looking, for example, for Form Ds or Form D1s, which are when crypto funds are raising new capital. We're looking at S1s, so when companies are announcing IPOs related to crypto. 8Ks when companies' quarterly earnings are, mention crypto. I mean, and so much else. We parse through every central bank announcement, every update from projects, so their Medium, their blog, their forum, etc. I mean, you name it, anything to do with crypto, we built technology to go parse it faster than anybody else. So we parse through, at this point, about 6,000 sources every 3 to 5 seconds. So we basically built, technology to go out and parse and parse and parse. And what we do is we basically help our clients identify market moving or at least notable information in real time. So at this point, a lot of our clients are still using that to trade. And so, for example, a client could say, show me every Coinbase listing in real time. Show me anytime an asset that I trade gets hacked. Show me anytime there's going to be a big lawsuit against Tether. There are going to be new court documents that come out today in that lawsuit. People are going to want to see those documents. And so we built it for funds, but we found a lot of applications. Other than that, we power all the breaking news at the biggest crypto publications. The 2 biggest ones by viewership all use our technology to identify and write news stories. But we're actually really interested now in more of the enterprise focus of the space. We're more focused on companies as opposed to tokens. So we're now trying to focus on monitoring custody in real time, monitoring mining. What are mining companies doing? What are equipment manufacturers doing? Are there delays? Who's receiving funding? And so our focus, while certainly we do focus on tokens, we now focus a lot more on overall industry monitoring. And so we're serving regulators, law firms, custodians, audit firms, big enterprises that are trying to stay abreast to the most salient developments in the space, really from a risk management and compliance point of view.
So that obviously puts you in a unique position in terms of being able to know as well as the sort of the source for so much of this data, and as you put that so much investment into being able to scrape, as you said, all that data in a way that no one else is really doing in the space, as far as I'm aware. And you can correct me if I'm wrong on that. But are you seeing, these new players come in wanting this information? Who are these players? Is this coming more from regulators who, again, are looking for compliance? Is this more from institutions for risk management? Are there trends you're noticing on that buyer side for your information that could be interesting to our viewers?
Yeah, I mean, we're talking to people that you have no idea are in crypto and have way more money than anybody in this space right now. I mean, we were on with a fund that has somewhere between 500 billion and a trillion in AUM the other day. We're talking to, companies of that size. They're not necessarily interested in buying shitcoins, though. I mean, some of them are interested in buying Bitcoin, but a lot of them are also just interested in monitoring the space. So I think a lot of large pensions or large asset managers may not actually directly allocate to Bitcoin, though I'm sure a lot are, a lot are already and a lot will. But some are interested in investing in prime services, custody, compliance solutions, different things like that. And so we're definitely seeing a lot of, we're talking to a lot of folks that, were not in this space 3 months ago, which is awesome, which is super cool. And I think we'll see inevitably a lot more regulatory oversight of this industry. In the UK, for example, the FCA has cracked down on derivatives for retail. And so it doesn't necessarily mean banning of crypto, which I don't think is going to happen, but I think it can be banning of products built on top of crypto. So it's really a mixed bag. Everyone's looking at the space. To think that everyone isn't is misguided. I mean, we're now at a point where crypto is worth $1 trillion. Bitcoin is $750 billion, or, maybe it's slightly less right now, but, crypto is here, it's arrived. And, I think it's, people want to get involved.
So, I guess then it gets me wondering, and I'd love to hear your views on this. There was just a big furor in the last couple of days because Christine Lagarde from the European Central Bank came out saying that, Bitcoin needs to be regulated because it's facilitating money laundering. The price
went up like 7% in like a couple hours after she announced that.
Right. All news is good news, I guess, is the takeaway from that. But is there a risk? Have we passed that tipping point where enough institutions are in play that actually, maybe regulation, sure, but like we're away from that point of regulating out of existence or regulating, I don't know what the term is to be less dramatic than that, but you know what I mean? Like, are we beyond that tipping point where now there's an acceptance phase and we're moving to sort of bring it into the mainstream?
I don't want to say yes, just because I could be wrong, and you never know.
Best guess.
My best guess is yes, we're past that. Anchorage got a full banking license. They have access to the Federal Reserve. Right. They can borrow from the Fed. They can custody crypto assets as a bank. They're real companies. Fidelity is making massive investments into this space. State Street has worked with Gemini on custody in the past. Some of the largest investment banks that you guys know are privately working on prime service solutions for digital assets. Look, I think certain things could be named securities, right? Like, for example, Celsius, I think potentially is a security. XRP is clearly a security. I think that a lot of ICOs are going to be cracked down on by the SEC. I think that will continue to happen. I think founders will, but I think in terms of fiat on-ramps and stuff like that, I'm not concerned. I think there will be regulation, right? We saw that proposed FinCEN rule, I believe it was, on basically having to KYC any sort of wallets that are interacting, right, with specific applications, which would have really impacted DeFi and some of the other stuff that's being built. So I think regulation will come down on certain parts of the industry, but I don't think it's going to be regulated out of existence. And I think that Bitcoin is safe at this point. But I'm only holding Bitcoin because I just think there's a giant question mark for everything else in this industry at this point.
So, all right, then looking into 2021, I want to drill in specifically, ahead. We've sort of had a look at what you've seen in the recent historical trends, talking about those hype cycles and the sort of the growth of the industry as it stands. Here we are, first couple of weeks of 2021. We already had Bitcoin seen finally a sort of break in that seemingly unending bull run that took us all the way up to 42,000 now. Drop back down to 30 now. We're hovering at 38 is it or so at the time of filming. But that market's going to shift. It seems to have recovered, and generally the market as a whole seems to be back on an upward trajectory as a whole. I don't know, maybe it doesn't have to be market driven, but what are you looking at for 2021? What sort of key things are you actually holding out for in this year ahead when it comes to the space?
I'd like to see sustainability. I really don't like how fast Bitcoin's run up. I'm still
It gave me the heebie-jeebies too. It's stressing me out.
It doesn't feel right. It doesn't feel right. It feels 2017-y for me, which is not a good thing.
No.
I would like to see sustainable growth. You know, I got a little scared when Bitcoin went back from 30 to 40 so fast as well. I'd like to see a little bit less greed, but you know, we're never going to see that. You know, I'm looking for sustainability, right? I'm looking for continued interest. I'm looking for something not just to be a hype cycle for a week, but, you know, for this to last for a year. And I'm personally really interested in stablecoins. I'm very, very interested in them for a few reasons. You know, the first is I think remittances are very interesting. You know, if you look globally, according to the World Bank, the average cost to send a foreign remittance at a post office or a bank is between 8 and 11%. And so if you're a domestic foreign worker, like if you're a foreign worker, for example, from the Philippines living in Hong Kong, you know, it may cost you, you know, 8% to send money home, or even with a mobile bank, 3.5%. I think stable coins have a very exciting opportunity to help, to help, foreign workers send remittances back for way cheaper, way faster. I'm very interested in the applications of that. I'm interested in, you know, helping to bank people that cannot be banked otherwise. I'm interested in central bank digital currencies, and I'm interested in Bitcoin. I mean, I'm not, you know, we'll see. I mean, this market is kind of crazy. I'm just interested in seeing how long this lasts, and if retail sticks. We'll see. I mean, it's to be seen. I mean, I don't think anybody has the answer to that question yet.
No, I certainly don't think they do. Josh, all right, as usual, you've given me a lot to think about. You've given me excellent information, those insights upon insights, and I could pick your ear on this all day and all night, but I know I need to let you go at some point. So without further ado, any last thoughts, any last words, anything else you want our viewers to hear or think about as they, you know, reach this conference into the year that will be?
Don't FOMO, be careful. Be careful. If something's already pumped 200%, don't buy it.
Wise words.
Also, don't be afraid to take profit. If you bought a shitcoin and it went 20% and went up 20% in a day, and you have no idea why, but you can make 20%, get out. Just be careful. I think we're gonna have the Wild West again, and just be careful.
Okay, wise words and a sage wisdom, a little bit of cool heads prevailing in a hype market that's getting everyone excited. Either you're in and you're making all this cash, people taking loans on their houses, all sorts of craziness.
Don't take a loan on your house to buy Bitcoin.
Yeah,
please don't do that.
I'm glad you said it. I've been telling people this. No one believes me. Maybe they'll believe you, Josh.
Please don't. Do not put any more in crypto than what you're willing to lose. I have a very significant portion of my net worth in Bitcoin, but I'm willing to lose it. If I lose it, whatever. I'm young. I'm a founder. Everything else is already at risk. So at this point, whatever. I'm fully into. I've YOLO'd completely into crypto at this point. But only YOLO completely into crypto if you know you'd be okay and you'd stay on your feet if you do it. And if you guys want to keep putting your stimulus checks in Bitcoin, I'm not opposed.
Yeah, that seems okay. That seems sensible for those who can afford it. Again, this is not financial advice we're giving here. Yes. Just general overarching thoughts. All right.
I don't think saying I'm not opposed is financial advice.
No, exactly. All right. Let the lawyers remember that when they're going through this in the years to come. All right. Josh Frank from The Tide, thank you so much for being with us. And for everyone watching at Reimagine, make sure you stick around. There's so much good content, so much up-to-date information on what's going on in this crazy, hectic crypto space right now. I've been Asher Westropp-Evans. Keep watching.